Hey, Dan Passarelli here. Happy Friday. Knocking this video out a little bit before the close here today, because I won't be around here on the close. But right now, at 2:24 Central Time, which is 36 minutes before the market closes, S&P 500 was down 0.2%. So not a lot, but you'll want to double check where it actually closes on the day a half hour later or so than when I'm shooting this, because there was quite a bit of moving around, especially towards the end of the day. Let's talk about the move that happened and what to expect next. So we see that over the last week and a half of trading days, we got that pullback that I've been talking about for the last couple of weeks. That did end up coming exactly to fruition as we talked about. Now, the technical sign here is pretty important. The 50-day moving average tends to act as a support level. Now, we went through that today, but we headed back up, and at least at this point, it's looking like we're going to close above it, which is key information technically. That would be a sign of resilience. Not to mention this hammer pattern here on high volume. That means that the sellers tried to sell it, but the buyers just had more volume and took control. That is definitely a more positive or bullish sign for the market. From a fundamental standpoint, the market's still overpriced by a lot of metrics. That could weigh on the market. But is this a dip, or is this one of those bigger pullbacks, just the start of a bigger pullback? Well, when we get those bigger pullbacks, there is always, every single time, a catalyst. The potential catalyst here that people are talking about is the government shutdown and how much that would weigh on the market. We did have the administration saying that the shutdown could start weighing on the market. And when they start talking about it, especially because by nature politically they'd be more apt to defend the market politically, I feel like that could be a real sign that maybe the shutdown could indeed be weighing on the market. Now, that being said, the other catalyst here is, I believe I mentioned this in yesterday's video, Michael Burry bought $1 billion worth of puts on the two biggest and arguably most overvalued AI stocks, Nvidia and Palantir. And so, because they make up such a big percentage of the market, could that be what's going on? And in part, it certainly is. It's just, will that continue? And we could look at Nvidia today. It was a bit resilient after a few big red candles. We could look at Palantir, and that's bizarrely resilient. At this point, looking like it might close below the 50-day moving average for 2 days in a row, which would be a technically bearish sign. But all that's fine and good. Those are two stocks. But does it what else does it infect? So Microsoft is a big user and a big just blue chip tech stock user of AI, and they've got their hands in AI. That one really had a pretty good route lately. After leveling off for a couple of months, making a run for it and then pulling back with pretty high implied volatility, even after earnings. That is one of the signs that we're looking for that you're not going to see in the headlines that I need to point out to you to keep an eye on. Because when some of these regular stocks that are in AI, when they start pulling back as a result of this, there's where momentum could pick up. But we're not there yet. Monday is going to be a pivotal day because the VIX is set to close above 20 at this point. that means the market is nervous. And while a lot of retail does end up just sort of buying regardless, oh, look, it's another dip, let's buy. Oh, the market's going up, let's buy. Which is, in my opinion, why the market is at this overvalued price, because the professionals keep telling us that we might be in a bubble and that the market's overvalued. So it is retail who makes up a much bigger share of the market these days, who are supporting the market and driving it up to these record high valuations. All that being said, Monday's a very, very pivotal day. If we get a pullback Monday through the 50-day moving average, I would expect to see some follow through to the downside. But if we stay resilient on Monday, it's going to be the volatility selling opportunity of a lifetime for all you time spread traders, covered call and cash secured put traders, who you know are near and dear to my heart, and even credit spread traders. Have a great weekend. This is Dan Passarelli. Trade smart.